listed African Safari and Adventure Holiday Group, Wilderness Holdings, reporting a 13% increase in revenue. Final dividend coming through at 4 Botswana Thebe, and HEPS coming through with an increase there of 196%. Let's break down the numbers with Keith Vincent, acting CEO at Wilderness Holdings. Thanks for joining us, Keith.
Pleasure, thank you.
So there we go, break down the numbers for us, because we've got top line growth there of 13% and bottom line growth, EBITDA up 40%, and then HEPS growing by 190%, so 196%. So what drove that bottom line earnings growth?
I think the main thing was firstly growing our dollar revenue source, which accounted for just over 6.5% of our growth. The rest is a mixture of exchange rates and rand and pula. At the same time, we did a lot of restructuring last year in the form of our product and spent quite a bit of capital in upgrading our product, the camps themselves, which has paid huge dividend. We saw.
I mean, how much money has gone into kind of capex in terms of refurbishments?
In the prior year, we spent 64 million pula on capital and refurbishments, and a lot of that is in aircraft. About half of it's in aircraft, and the other half is in the camps themselves. We undertook to do that transformation very quickly to get our product ahead of all our competitors. At the same time, we also closed down some areas where there was an oversupply of beds, in Namibia in particular. And we also closed down a regional head office in Zambia and restructured to what we now call the Zambezi region, which is Zambia and Zimbabwe operating out of one office. So we've realigned a lot of our cost structures, and a lot of the big difference below the line is because we've been able to hold our costs flat in a very high inflationary period.
Just looking at your overall total bed night sales, you strip out Namibia, only increasing by 1%. I mean, do you think that you'd be able to build on that going into 2013, because that pretty much flat performance there?
Absolutely, and I mean, there's no doubt we see in Namibia that performance is probably going to remain reasonably flat for the next couple of years. Having said that, the demand into both Botswana and Zimbabwe is growing significantly, especially out of North America. Europe's still a bit flat, but Asia is also growing nicely at the moment, so out of the financial capitals in Asia.
So North America, Asia is where you're starting to kind of get a bit of traction, is what you'd call it. We just hosted in Durban, Durban once again this year. I mean, anything that changed, any kind of themes that came out from this year's in Durban when it comes to the luxury safari camp space in Africa? Anything specifically that you'd be able to build on going forward?
Absolutely. I think this last in Durban was probably the best in the last 6 or 7 years. So we're very excited about it. A lot of new companies coming on board from the agent's point of view overseas, and a lot of excitement and looking for products. So there's definitely hunger in the international market and a lot of competition. So the internet's definitely playing a big role in that, in consumer awareness. So a lot more consumer awareness, which is driving the demand. And also out of North America, we're getting long lead bookings, which are stretching back to the sort of pre-2008 days. And that obviously allows you to maximize your occupancies better and better as you get longer leads. I
mean, when you talk about long lead, give us an example of where you've got bookings throwing forward to.
We're already booking up most of our high season for the year 2014. So the June through August 2014 is filling up very nicely at the moment.
And of course, you classified in the luxury safari camp space. You've got 59 camps as it stands right now, most of them still in Botswana. Do you still think that sticking to the luxury space is the right area to be in when it comes to safaris?
Absolutely. From a wilderness perspective, we see that as the future growth for us over the next sort of 3 to 5 years. And we see huge strength, especially with Zimbabwe coming back online. We've seen nice growth in Zimbabwe, a bit of a stall this year, I think primarily due to the elections coming up. But lots of interest, and there's enormous demand on the Zimbabwean product into the future. And we've got all the infrastructure sitting in place.
So, I mean, has that infrastructure been running, of course, below capacity? Give us an idea of, how the Zimbabwe camps have been running over the past few years, given all the uncertainty, and what you're foreseeing right now.
There's a rate differential between Botswana and Zimbabwe, our Zimbabwean product, of about 60%. So there's enormous rate growth or yield growth per bed night in Zimbabwe. And there's also lots of occupancy space available. So under license and contract, we have a lot of beds we can still develop, and existing beds where we've got occupancy and yield growth potential. and the infrastructure is already in place. So it will be a small investment to get the product back online again.
Certainly is interesting, and that's something that we've started to pick up on, you know, kind of the kind of uptick in the local economy there in Zimbabwe and the recovery that continues there. But it's really hard to talk about then inflation across the board if you've got, you know, that 60% differential in Zimbabwe relative to Botswana. But can you talk about average rates across the group right now, what you're seeing and what you expect going forward?
Well, what was pleasing to see as an average from the group perspective, that our average yield per bed night grew by 6%. And that as a group, that moved from about $810 US a bed night to about $855, $858 a bed night. So that was significant growth in dollar terms in the local economy, and we see that being able to sustain itself over the next course of the next 2 to 3 years.
So if you have to look at the next period for you, I mean, what's your key focus now that you've right-sized the business, that you see potential in Zimbabwe, that of course you've sold off some assets? What's the focus? The
focus is very much 2 areas of focus. Is more consumer awareness, and we've launched a really nice big search engine optimization program and a new reservation program to get our product into our agents' mind first and foremost. And secondly, on the other side, is to fill our low periods, generally between mid-December to the end of March. And we were very successful this last year, and that's also part of the reason, as we launched a residence club, in which we got 150 paid-up members, and that's primarily aimed at the SADC market, which fills up our spaces on a last-minute basis. So it's a nice, we got really nice
better rates
support.
than $110 a night.
A lot better rates, and because it's last minute, and the South African travellers in particular are happy to book 2 weeks out, where the international traveller is not prepared to do that.